profit from the profit and loss account. So I'll share the screen so that it is easy for us to understand. So we have discussed about profit and loss account yesterday. So in that, if you look at that, there I said in profit and loss account, we will discuss and we will take only those expenses which are indirect. And we take indirect incomes in the profit and loss account. So now, so before going to look at the question that has been given to us, that is the illustration given to us, that is to calculate profit and loss account. So in this question, it is like this that just give me a second. Here in the question, it is given like this, that is from the following balances extracted at the close of the financial year ended 31st March 2018. You can just look at, if you have textbook, page number 86, that is illustration 4. From the following balances extracted at the close of the financial year ended 31st March 2018, you are asked to prepare profit and loss account of Alekji and Gross means brothers as at the date. And from this, they have given us gross profit, carriage outwards, discount outward, discount that is in the debit in the brackets. If you can just look at here, it is given as debit, and apprentice premium, salaries, printing and stationery, rent, rates and taxes, fire insurance premium, traveling expenses, bad debts, income tax paid, trade expenses, rent received, daughter's school fee paid from office cash, life insurance premium. And so this is the information given to us, and they are asking us to prepare profit and loss account out of this information given to us. Could you able to see the screen which I am sharing?
Not visible, ma'am.
Okay, it's in loading. It will be visible to you in seconds.
Now okay.
Yeah, okay. Now it's visible?
Yes, ma'am.
Yeah. So this is the question where they given us some related information with regard to the profit and loss account, and they're asking us to find out profit and loss account. So what I said, In profit and loss account, always it starts either with gross profit or gross loss, which has been brought forward from trading account. So here they given already gross profit to us. If you can see here it is. So already gross profit is given. So gross profit is nothing but income to us. As I said, gross profit is an income, and in profit and loss account, so if it is a profit and loss account, so the T-shape, credit side, all incomes, debit side, all expenses will be returned. So gross profit is an income. Profit means it's income to us, obvious thing. And whenever we get profit, that will be written on the income side, that is credit side. So I write here as by gross profit brought down. By gross profit brought down. So whatever profit is there from trading account, we bring it to the profit and loss account. So whenever we are bringing from some other account, we call it as brought down. So here profit is 3,30,000. They given us here carriage outwards. Yesterday I said carriage outwards means any transportation charges that are related to sales. Our customer has purchased from us, and the expenses which are related means I have to send my goods to their place. So some auto or some transportation are required. So it is nothing but it's an expenditure. So all expenses will be written on the debit side. Here I write to carriage outwards. And the amount is 7,500. Next, if you look at here they given in the next one is discount. Discount and the bracket they given DR. DR means debit, means it's an expenditure to us. It's not an income, it's a loss to us. So whenever losses or expenses, that will be debited. So to discount. 1,500. So this also written on the debit side. Next, apprentice premium credit. Credit means nothing but it's an income to us. So all incomes are written on the credit side. So here I write by apprentice premium. And the amount is 4,500. This will be written on the credit side. 4,500. Next, salaries. Salaries is an expenditure or income to us. Salaries are always expenditure to the business. So all expenses, as I said, will be written on the debit side. So here I'll write to salaries. And the amount is 68,500. Next, printing and stationery. It is also an expenditure. Printing and stationery means some pens, pencils, papers, whatever that are related to the business, we will purchase it. So these are also expenses. All expenses I said now, so I write on the debit side to printing and stationery 860. Next, rent. Rent is also an expenditure. It's not an income to us. We are paying rent to the owner. So all expenses debit side to rent. Next, we have rent and taxes. Even we pay taxes also. Whenever we pay tax, it's an obvious thing. It's an expenditure to us. So we write on the debit side to rent and rates and taxes. And amount is 1,050. Next, we have fire insurance premium. We take insurance either for our goods or for our office. So we take fire insurance premium means it means we means our business, that is Alexji and Brothers, are paying insurance premium to the insurance company. Whenever we are paying, it is an expenditure to us. So that expenditures are written on the debit side, 2,900. Next, traveling expenses. The name itself is telling it is an expenditure to us. So that will be written again on the debit side. Next, we have bad debts. Yesterday I have explained that bad debts are evolved because of credit sales. So here bad debts means a loss to me. The person who has to give me amount will not give me any time back. I cannot receive the amount back. So that is a loss to me. All losses and expenses. It's very simple. If you remember the rules, real account, personal account, and a nominal account. These three rules are applicable whenever you prepare any accounts. Based on these three rules only, everything is accounts are based. So here, income tax paid, tax we are paying, yes. So as per nominal account, all expenses and losses should be debited. All incomes and gains should be credited. This rule is applicable over here. So bad debts is a loss to me. So I will debit the bad debts to profit and loss account. Next, income tax, that is the expenditure to me. All expenses and losses I said now, as per nominal account rule should be debited. So I'll debit to the profit and loss account, even income tax also. And trade expenses, this is also an expenditure. Yes. Next, here, rent received. Earlier here, if you can see here, this is only rent they given to us. They did not mention whether it's an income or expenditure. When nothing is given, it's an assumption that rent is an expenditure only. When nothing is mentioned, whether it is an income or expenditure, in that case, we take it as expenditure only. But if you look at here, they given us rent received. Rent received means what? It is an income to us. So whenever it is an income to us, it will be written on the income side, that is credit side. Credit all incomes and gains. Credit all incomes and gains. So as it is an income to us, we write on the credit side by rent received. And the amount is 3,600. Now, the point comes here. Daughter's school fee paid from cash. What we are doing here? We are taking cash from the office cash. Means it's a drawings. Anything taken for the personal purpose is called as drawings. So drawing should be done what? It should be taken from the capital only. Why? Because capital means, yes, my dear students, do you know what is capital? With whatever amount the business is started, commenced. At the commencement of business, whatever the investment has been done by the owner, we call it as capital. And whenever anything is taken by the owner from the business, rather than writing somewhere, whatever amount is invested by the owner, from that it will be deducted. So we'll deduct it from capital. Next, life insurance premium, Mr. Alexi. So this is the life insurance premium paid to the personal thing. So this is the thing. So whatever difference we get, that is called as either net profit or net loss. So let's look at here. You can look at the solution, the same what is mentioned over here. Gross profit is written on the credit side. So you can look at here, gross profit on the credit side. Next is carriage outwards, it's an expenditure. So written here, carriage outwards on expenditure. Next, discount, debit means I said it's a loss to us. So here they are given discount allowed. Next, we have apprentice premium. As it is given in the bracket, CR means the income to us. So written on the credit side by apprentice premium. Next, we have salaries. It's an expenditure to us. So here the first point itself is on debit side, salaries. Next, we have printing, stationery, rent, rates and taxes, fire insurance premium, traveling expenses, bad debts. These all are direct, indirect expenses. You can see here, rent, rates and taxes, printing and stationery, trade expenses. Next, we have traveling expenses. That is also indirect expenditure. Next, we have bad debt. This is the loss to us. So all losses will be debited. So that is the reason it has been debited. Next, we have fire insurance premium. That is also, it's an expenditure to us. So that all are been written. Now, if you look at here, few things you can observe. Income tax paid, daughter's school fee, life insurance. Daughter's school fee is nothing but it's a drawings. We are drawing cash. We are taking the cash from the business. So whenever you are taking from the business, I said it's a drawings. That is the reason drawings will not be taken in the profit and loss account. It will be directly deducted from the owner's capital, that is in the balance sheet. So that is the reason that points have been not taken. Even income tax, life insurance premium, that are personal expenditure. Income tax is paid by the individual and life insurance is taken on one of the person. And business is not a person. It does not have any life. That is the life of the owner. So that will be deducted from the owner's capital only. These 3 points have been not taken away. That is the reason it has been not taken in the profit and loss account. And if you look at here, credit is more and debit is less. And the difference of this, we call it as net profit. And always it is transferred to capital. Why? Because the profit belongs to the owner. Is it clear?
Yes, ma'am.
Yeah. Any doubts with regard to this?
No, ma'am.
Okay. Now, let's move to the next one. So they have another question. If you want, I'll discuss it, because this is now full-fledged problem, trading and profit and loss account. Shall we discuss this?
Yes, ma'am.
Okay. So just earlier we have seen gross trading account separately and profit and loss account separately. But here it is a combination of both the things, that is trading account and profit and loss account, how they are prepared together. Now look at this question. From the following trial balance, in the bracket they have given partial of Navjot traders prepare a trading and profit and loss account for the year ending 31st March 2018. And if you look at here, they given us particulars, debit, credit, and particular stock on 1st April. So whenever it is 1st April, what does it mean? It's nothing but the opening stock. If this can be understood when you look at here, the point 31st March 2018. 31st March means it is our ending period. Whenever it is 31st March is our ending period, it means that 1st April is our opening date. So here our year will be 1st April 2017 to 31st March 2018. So this is nothing but it's an opening stock to us. So whatever stock is given, this is nothing but the opening stock for us. So opening stock will be where it will be taken. It will be taken in the trading account. Opening stock will be taken on the trading account debit side. That is the first point where trading account starts. Next, we have purchases and sales. See, if you can look at here, both purchases and sales are given in particulars and the amount are being given debit column and credit column. So here, which is purchases, which is sales, how to understand? Purchases means goods are coming into the business. Debit what comes in as per the real account. So goods are coming. So whenever the goods are coming, that will be debited. So this debit column amount is what? It is related to purchases. So this 50,000 is related to purchases. Now credit column is what? Sales. How do we define sales? Sales is defined that here, how can we find out? Credit what goes out as per real account. Whenever we are selling goods, goods are going out of the business. So whenever goods are going out of the business, as per the real account, it should be credited. That is the reason sales amount is credited. That is 75,000. Next, we have returns. Again, if you look at your returns, they given both debit column as well credit column. So how to understand this debit? Which one is purchase returns and which one is sales returns? See, when goods are coming, we are debiting. Purchase return means we are returning back to the supplier. So whatever goods came, we are returning back. It means goods are going out. Whenever goods are going out, that will be credited. As per real account rule, credit what goes out. So this 2,000 given in the credit column is nothing but the purchase returns. What does it? It is purchase returns. Then what it is? 4,000 is given in the debit column. This return is nothing but sales returns. How to understand this? Whenever goods are sold to the customers, I sold goods to X. Now he is returning back goods to me. It means whatever books I sold him is giving back. Means they are coming again back into the business. Debit what comes in. So your goods are coming in. This is debited. So this 4,000 is nothing but sales returns. and this 2000 is purchase returns. And always remember that returns amount should be deducted from the respective thing. For example, if it is a purchase returns, deduct it from purchases. If it's a sales returns, deduct it from sales. Now, carriage. Carriage they given directly in the debit column, and we do not know whether it is a carriage inwards or carriage outwards. So for our understanding, if you can just look at here below the carriage, they given inwards. So this is assumed as carriage inwards and this is assumed as carriage outwards. So there is a difference. Carriage inwards is taken in which account? In trading account. All direct expenses are taken in trading account and all indirect expenses are taken in the profit and loss account. So these inverts, whatever inverts 2000 amount is given, that is taken in the trading account, and this carriage 2500 is taken in profit and loss account debit side. Next we have stationery, and if you look at stationery, they given debit and credit. It means one is expenditure, the other one is income. Next, rent. Rent interest, again we have debit and credit, means one is expenditure, the other one is income to us. Next we have salaries, 4800, it's an expenditure. We take in profit and loss account. The later one is general trade expenses, and this is also indirect expenditure to us. And if you look at here, discount. Discount in both the columns they given. Debit column 500, credit column 1000. Then how to take these? Whenever it is given in the debit column, it means it is an expenditure to us, and discount is an indirect expense or income. So it's a debit means their expenditure, credit means it's an income to us. Next we have insurance, it's an indirect expenditure. So and they given, if you can look at here, closing stock on 31st March 2017 is 14,000. So I think here it is 31st March 2017, not 18. Is the given wrong. It is 31st March 2017. So now we will draw trade, and whenever you are drawing, we will not draw separately. We will write in the same account only. We write in the same account only. For example, we write like this. We draw one account only. Debit on the left side, credit on the right side. Both amount columns on both the sides, and the other column would be particulars column. Both the sides, debit side, particulars and amount column, credit side also particulars and amount column. And we write heading like this: trading and profit and loss account. Trading and profit and loss account of, what is his name? Alokji. Yeah. Profit and loss account of Alokji for the year ending, for the year ending 31st March 2018. This should be written. This is the format you have to write. Trading and profit and loss account of Alekji. If name is given, we write of Alekji. If name is not given, we will write just like this: trading and profit and loss account for the year ending 31st March 2018. That's it. And here our heading is trading and profit and loss account. You may get it out. Ma'am, you are drawing only one account, but you are telling two accounts are there. Yes. In the same account, we will assume that the first half is trading account. I'm not drawing any line, but it is assumed this line is trading account. So it's an assumption. On the assumption of that, so here what we will do, we will write the first 4 to 5 lines, we assume it is trading account, and the remaining place is assumed as profit and loss account. So here first, what is the first one given to us? Stock on 1st April 2006. What I said, it is an opening stock to us. So whenever it is an opening stock, we write like this: to opening stock. to trading account to opening stock. And amount column 5,000. Amount column 5,000. Next is purchases. Purchase is an expenditure to us. So I write debit side to purchases. I will write in the inner column. Why? Because returns are there. Yes. So whenever there is an adjustment related to any expenditure or income, at the time we will write in the inner column itself. To purchases, amount is 50,000. We even have sales. Yes. Sales is an income to us. So we write on the credit side, buy sales, and the amount is, this is also in the inner column. Why? Because we have returns here, both returns are there. So I'll write in the inner column 75,000. Now we have returns now. Returns are there for purchases as well as for the sales also. So what I'll do for purchases, first I'll write in the inner column less returns. Less returns. And the returns amount is where? It is not, debit column is not the purchase returns. Credit column is the purchase returns, because we are returning back. Goods are going out. Yes. So here I write amount is 2,000. So now what is the value of purchases? 50,000 minus 2,000 comes to 48,000. 48,000. Now again we have returns of sales returns also. Sales return means debit column. So here also again less sales return, that is returns, and the amount is 4,000. And the amount comes to 71,000. That we will write in the outer column. Next we have carriage. Carriage means here I said we will assume it as carriage outwards as there is no explanation to us. So here carriage outwards should be written in profit and loss account. Then how to draw profit and loss account? So what I do, I'll not draw any profit and loss account separately. Instead, I leave some space and start writing profit and loss account items. That is to carriage. To carriage. So this is profit and loss account 2,500. Next, inwards now, carriage inwards, it is related to trading account. So I'm writing in the trading account to inwards. And the amount is 2,000. Next, we have stationery. Stationery means it's related to profit and loss account. So I write in again profit and loss accounts to stationery. Again, we have both debit and credit, means it's an income as well as expenditure to us. So I'll write both the sides. So this way we will write all the things that are related to profit and loss account as well trading. And that's what we can just look at here. Opening stock, purchases we have deducted, and sales here we have deducted, returns, and the carriage inwards. So they did not return here. Why? Okay, maybe some mistake here it is. Carriage is given and inwards is given, but they have not taken anywhere over here.
Carriage is written in our upside, man. Toward carriage inwards and to gross profit dividing.
No. That I'm not asking about the solution. I'm just discussing the question. If you just look at here, they given carriage and in inwards separately.
Okay.
Either they should give carriage inwards or carriage outwards. They did not. It should be either one word, it should be one thing.
Okay.
Or if it is written like this, and there should not be two amounts over here.
Okay, I understand.
Yeah. Inwards means it's direct expenditure. But here they did not mention again whether it's outwards. So I assume when it is an inwards, it will be outwards. But if you look at here solution, they have taken only inwards. So it may be some printing mistake or something else. This has been given twice.
Okay.
If they have taken only carriage inwards, that is only 2,500. This has been ignored. And stationery, if you look at here, this is an expenditure debit side and credit side is an income. So you can just look at here. This also has been ignored. So something mistake. It is the question itself is some mistake. Why? Because if you look at here, stationery debit column 3,000 is given, credit column 1,800 is given. But they written here rent received. Rent received they have given. So there is a mistake in the question. So please don't look at the solution. we will go as per this question given to us. So stationery on the debit side means it's an expenditure to us, and credit side means it's an income to us. And even rent also, debit side is an income, credit side is an debit side is an expenditure, and credit side is an income. Salaries, it's an expenditure to us. We will write in profit and loss account debit side. Trade expenses, it is also an expenditure to us. We will write on the debit side. And discount, debit column, debit side, credit column, credit side. Insurance, it's an expenditure. We will write on. These all are indirect expenses. Only to the trading account, opening stock, purchases, sales, returns, and carriage inwards. Only these are related to trading account. Remaining all points comes under the profit and loss account, which are called as indirect expenses or indirect income that are related to our business. Now, and the last point is closing stock. Closing stock is written on the trading account credit side. Trading account credit side. Now, if you look at here, the difference. So what we will do, we are not, if you can just observe here, they did not mention any trading account separately or profit and loss account separately. They written everything in one account only, if you can observe here. The first part, this part, I think you can see where I highlighted.
Yes, ma'am.
Yeah, this is called trading account. The first part is trading account. And the remaining part, this is profit and loss account. So here we are not drawing any account separately in the same account. First half is left for the trading account and the remaining is used for the profit and loss account. And if you can look at here, trading account, the credit is more, that is 85,000, and debit is less. And the difference of when credit means it's an income and debit means it's an expenditure to us. So income is more, expenditure is less. So the difference is nothing but to gross profit. This is gross profit carried down. We call it as the difference. Whenever we are balancing the account, we call it as carried down. C by D means carried down. This gross profit, and as soon as you total, you have to total up the trading account where the trading account gets closed. And this gross profit is brought to the profit and loss account. So as I said, profit and loss account always starts with either gross profit or gross loss. We can just look at here, we are bringing the same gross profit which we got in trading account to the profit and loss account by gross profit brought down. Say profit, so it's an income to us, so we are writing on the credit side. Now we have written all the expenses on the debit side, incomes on the credit side. Again here the difference, credit is more, that is 37,300, and debit is less, and the difference when income is more and expenditures are less, we call it as net profit in profit and loss account. In profit and loss account, we call it as net profit. And this profit and loss account, I think they given here wrong. It's, you can just look at, they mentioned net profit transfer to profit and loss account. This is only profit and loss account. It should be written net profit transfer to capital account. It's not profit and loss account. It is capital account. You can correct it. This is how we prepare trading account and profit and loss account. That is without any adjustments. These are the only basic things they given us: direct expenses, indirect expenses. But when adjustments are given, then again little scenario changes. Okay. Now let's. Is it clear?
Yes, ma'am.
Yes.
Yes, yes.
Okay. Okay. If you want any question also, I'm ready to explain it. So next comes preparation of balance sheet. So actually, whenever a business is started, every business main objective or motive is to earn profit. And that is able to know by preparing the final accounts. So final accounts includes three things, that is trading account, profit and loss account, and balance sheet. Trading account, profit and loss account, and balance sheet. These two things we have seen just now. Now let us try to understand the balance sheet. So balance sheet is not an account. Trading account we are calling. It's an account where we will have debit, credit, all expenses and all incomes, we take it. And the difference will be either gross profit or net profit or gross loss or net loss. But here we are not calling as an account, we are calling only balance sheet. It's a statement where we will try to write all our assets and liabilities. Assets means the things which belongs to the organization, which belongs to our business, or the people who are due to the business. And liabilities means where the business owes to others, where business is due to others, where business is liable to pay to others is called as liabilities. So if we take example of our example, that is stationery shop. In stationery shop, the books are goods. The books are goods. So where the books are kept in a properly in shelves arranged. Shelves are made up of furniture. And furniture is not purchased all the time. It is purchased only once. So that is called as asset. That is asset which belongs to the organization, which is useful for the business for the longer period. That are called assets. Furniture is an asset to the business. Now, the same, whatever the racks, lights in the shop, lights are not goods. They're arranged in the shop. They will work for many days or some years. If anything goes wrong, then they will purchase it. They'll not purchase daily. So lights, that is nothing. Lights are assets. Fan is a asset to the business, or AC if they have. AC is a asset to them. And in some stationery shops, they are even arranging Xerox machines or copy sheets, photocopy of any copies that will be taken. Xerox machines, we call it them as. That is also an asset. That machine will not be purchased daily. It is purchased only once. And whatever the books they are purchasing, or whatever the assets they are, whatever the goods they are purchasing, they all are recorded in one system or computer or some laptop, which is not purchased regularly. It is purchased only once. So that is also an asset to the business. And for example, all books are not sold. That, as I said, closing stock is there. But is it going to be sold immediately? No, it may be paid in sold in due course. It may be 3 months, 6 months, or 1 month. So presently it is cash is held up in the form of stock. So that is also an asset to the business. Now there are some credit sales we sold to customers on credit basis. I have sold books to Kalyan on credit basis. He said, I'll give you after 3 months. It means he's due to the business. What I said, whoever are due to the business, they're called as debtors, and debtors are nothing but assets. So debtors is also an asset. And my stationery shop is having some cash balance in the bank, cash at the bank. It's an asset to me, which belongs to the organization. Even in my shop, I have some cash shelf or cash box where cash is stored. So that is cash in hand. That is also an asset to me. I have some auto where I can send my all books to my customer's place. It's a vehicle, motor car, or some auto or some vehicle. It is also an asset to me. So these all are called assets which belongs to the business. Now, what will be liabilities? Even I purchased books from wholesaler or from supplier. Yes. So I am due to them. So I'll write to whom I am due. I am means my business is due to them. I'll call them as creditors. Means my business is due to them. I have to pay amount to them. So they are called creditors, means my business is due to others. When capital is there, na capital who has bought. Even I only brought my capital into the business and myself has started my business, but still owner is different, business is different as per separate legal entity or business entity concept. So whatever amount I invested in the business is called capital. It means business is due to the owner. Yes or not? Business is due to the owner. So capital is also liability, because one or the other day when the business gets closed, the amount should be paid to the owner. So capital is a liability. Any loan taken from the bank, so we are due to the bank, so that is also liability. Next we have credit, bills payable. I have purchased books from my supplier. Supplier said, so please sir, I cannot trust you, please pay the pay amount. I said, okay, presently I may not pay bill amount, but I can give you assurance by giving a bill to you that after 2 months or 3 months, I'll pay it. So that is bills payable. Like this, or whatever things I am due to outsiders, I am means your business. Due to outsiders are called liabilities. That will be written on the liabilities side. And whatever that belongs to the business, that are written on the asset side. So that is balance sheet, means all assets and liabilities should be equal. It should not be more or it should not be less. Why? Because whatever amount I am having, that are my assets, and whatever liabilities my business is having, that are my liabilities. Whether these assets are enough to pay these liabilities or not, that is found with the help of balance sheet. So now let's look at this. Are you able to understand?
Yes, ma'am.
Okay. So this is accounting equation. You can just look at your assets is equal to liabilities plus equity. Equity means whatever the owner has brought in the form of capital is called equity, and liabilities means where this is due to the owner, these are due to the outsiders. Together should be equal to our assets which belong to the organization. And balance sheet is also in the form of T shape, and you can just look at here. Is a balance sheet format. So again, liabilities, we have current liabilities, non-current liabilities. So let's understand what is current liability. Then we will go for non-current liability. So current liabilities means whatever the amount we means here all the time, remember we means our business is due to outsiders. For example, if you look at here, it is bank overdraft. Bank overdraft means anything amount which is withdrawn from the account over and excess of whenever bank overdraft means whatever the amount which is withdrawn from the account over and excess of our balance. For example, as an individual, if in my account there is 0 rupee and I cannot withdraw anything extra apart from that. 0 means I cannot withdraw anything from my account. But as a business person, you will be having current account with the bank. Current account means, hey, bhattamo. So whenever you see here, whenever the balance is not there, but as an individual savings account, I cannot withdraw the amount. But as a business person, you will be having current account with the bank. Current account means, though you do not have any balance in the account, but still in the capacity of a current account holder, you can withdraw the amount more than what is there in your balance. You can issue check to any person, though in your account there is no balance. That is called bank overdraft. Means it's a type of loan that is taken from the bank for a short period of time. That is called bank overdraft. Here, outstanding expenses means normally we will incur certain expenses, but we did not pay during that period. They will be paid at later part. Outstanding means the expenses which are not yet paid. The expenses which are not yet paid are called outstanding expenses. Means we are due to them. Next, we have bills payable. So why we are calling current liabilities? Because the liabilities which can be paid within a period of 12 months. The liabilities which can be paid within a period of 12 months or 1 year, we call them as current liabilities. The liabilities which can be paid or cleared within a period of 12 months or 1 year, we call them as current. So these are called current liability. So only these are not the current liabilities. Based on the question, we have to understand whether it's a current liability or non-current liability. Next, look at here. Fixed or non-current liability. Non-current means which cannot be paid within a period of 12 months, such as loan taken, owner capital. Owner capital means the business is started with him and the business ends with that capital only. So it's a non-current liability which cannot be repaid within a period of 12 months. So these are called non-current liabilities. Next, assets also we have two types, current assets and fixed assets, or we can even call it non-current assets. Same, current assets means the assets which are there or which can be received within a period of 12 months. Liabilities means which are paid, which can be paid within a period of 12 months or 1 year, or assets means which can be received within a period of 12 months or 1 year. We call them as current assets. For example, cash in hand. Cash in hand means whichever cash is there in our cash box, that can be taken at any time by us. It's ready cash. Cash in bank means if there is a cash in our bank, within a period of 12 months, at any period or at any time, we can withdraw. Next, marketable securities. These securities can be easily converted into cash within a short period of time. And prepaid expenses means the expenses which have we paid early. Actually, we have to pay it later month, but we paid early. It means they are due to us. We are not due to them. Next, bills receivable. One of our customer given bill to us that I will pay you amount after 3 months, but till that period, you keep our bill with you. After 3 months, you can convert into cash. So it is receivable within 12 months only. Next, sundry debtors. Sundry debtors means the people or the customers who are due to us. We can give customers on credit basis, but not for more than 1 year. If we are giving more than 1 year, our business is not going to run. Am I right or wrong? Yes. So these all are called current assets. Next, we have non-current or fixed assets. These assets will be there with the business for the longer period, more than 12 months. For example, if as our example was stationery shop, Xerox machine, we will sell every 1 year new machine will purchase. No, we will not purchase like that. The Xerox machine will be there for us more than 10 to 15 years, or depend on the how you are using that machine, it depends. Yes. Next, furniture, whatever the bookshelves are there, that will not be changed every 6 months or 12 months. It will be there with the company or with our shop within 10, 15 or 25 years, sometimes more than 30 years also it will be there. Yes. So like this, it goes on. So these are fixed assets. So when we write whatever profit we get from the profit and loss account, you can just look at here, add net profit or less net loss, or drawings which has been withdrawn by the owner for personal purpose. These should be all adjusted to the capital only, that is proprietor's capital which has been brought by the owner. So this is how we prepare the balance sheet. Is it clear?
Yes, ma'am.
Okay. So this is up to for the today, and the next class we'll continue the remaining things.
Okay.
Is it okay?
Okay, ma'am.
Okay. Give me a second.